Good morning. Today we will be covering Lesson 10-1. Just a reminder that if you are absent in the next few days, or if you are not sure how to do something and you want to recap, feel free to rewatch these videos on my YouTube channel, so you can find it under my name. So again, we'll be covering 10-1 on page 418, and that is cash sales and sales on account. So the first part of this is cash sales, and that is looking at cash registers. So there's a lot of information starting on 418, but the summary of it is that when you're looking at a cash drawer, it's important to be very accurate, and when you have inaccuracies, you have to account for that to make sure, to see where that money went and to see if you are cash short or cash over. So in a cash drawer, you start with something called a change fund. So usually that's $100 to $500 depending on how big the business is, and that is obviously to give change throughout the day when people give you the incorrect amount so that you can give them change back. Throughout the day you'll receive money, you'll give money out for returns and other reasons why you would need to give money out of your drawer, and at the end of the day it is your job as a cashier to count and make sure that you have an accurate number. I know a lot of you have experience in this area working at retail places or fast food chains, but if you are inaccurate in your cash drawer, then you have to prove the reason why. So proving cash is what we'll be working on first. So if we look at example 1, primarily what we're looking at is the chart that is yellow, labeled Tri-County Markets Cash Proof Form. So this gives us a really good equation to start with. So let's go ahead and mark that in red. So we're going to start with a change fund. Okay, and that will be given to you in the problem. And from there, you will add in the total cash received. And your cash register should be keeping track of this as you go throughout the day. Okay, then you will get a subtotal. From there, we will have cash paid out, and again, that's primarily for returns, especially in retail, but it could also be for things like going to the post office to get postage or going somewhere to buy something for the company. They might just take money out of the drawer, so that should be kept track of in the register as well. So cash paid out. Okay, from these numbers, you will get the total that should be in the drawer. So if you've done everything right, then this is the amount that should be in the drawer. But we all know that mistakes are made, and so that number might be a little bit different. So from there, you will physically count the cash that is in the drawer, and you will get the cash actually counted. Okay, so then you will compare these two numbers. And whatever difference you get will be either cash short or cash over. When you subtract these two numbers, if you get a negative number, it is actually cash over. And if you get a positive number, it's cash short. But a lot of people can't really wrap their heads around that idea. And so I think a much easier way is just to actually look at the numbers and see logically, compare the two numbers and logically think through, am I cash short or am I cash over? And we'll do a few examples to make sure you understand that. So using this equation, and I think it's best to have this equation going downward instead of across so that you can kind of build yourself a little chart. So we're going to use this equation. I'm just going to get rid of this real quick to go ahead and do A. So if we look at A, it says at the start of the morning on January 8th, Avery put $120 in change into the cash drawer. So that is the cash fund. So we started with 120. Okay. When the work period finished, his cash register total showed $5,289 received. So that's right here. $5,289.76 received and paid out of $76.30. We can actually just skip this subtotal here as long as we realize that this needs to be subtracted and this needs to be added so that we can get our total cash that should be in the drawer. So if we calculate these numbers out, what should actually be in our drawer is $5,333.46. But the problem tells us that what's actually in the drawer is $5,334.81. So if we compare these two numbers together, we can see that there should have been $33, but there's actually $34. So we are cash over by $1.35 over. We get a negative number. Okay, so let's go ahead and do B together, just to make sure we have it. And again, it's best to just kind of keep this format going, even though it's kind of long to write it out. This is something you definitely want on a note card for a quiz. So B says that Coletta put $80 change into the cash register. So our change fund is only going to be $80 this time. When she read the cash register totals at the end of the working day, they showed $3,102.45 received. 45. And cash paid out of $34.87. Subtracted, added in. So what should be in the drawer is $3,147.58. When she totaled out her drawer, what was actually there was $3,144.83. So if we compare these two numbers, there should have been $47, but there was only $44. Therefore, we are cash short by $2.75 short. Okay. All right, so looking at the next section, so those were cash sales, but obviously in business, not everything is done in cash. Sometimes you pay for things later, and that is paying with credit. Similar to a credit card, but businesses will have charge accounts. A lot of hardware stores have charge accounts. Gas stations sometimes have charge accounts. Mechanic shops, places of business like that. So we're going to look at sales invoices. So a sales invoice lists the goods sold and delivered to the buyer. The buyer has something called a purchase invoice. So this is the seller. This is the buyer. On the sales invoice, the unit price is multiplied by the quantity to find the price extension, so the total price all together. What we really care about, if we're skipping over to example 2, is what is the total sales invoice amount? So it's a very easy math, just making sure that you understand the concept. So example 2 says garden products sold yard and stuff, 45 watering cans at $9.31 and $60 lawn sprinklers at $7.89. What was the total amount of the sales invoice? You just extend that out and add them together. Sometimes though, if we're looking at example 3, it says 2 watering cans and 1 lawn sprinkler bought on sales invoice 1604 were defective. So from example 2, some of those were defective. So when something is defective and you return, when you make a return, that is called a credit. Obviously, you don't have to pay for them. So when you go to pay that invoice, where you're going to pay later, you get a credit back and you have to pay less than what was originally charged to you. And all you do is just subtract it out from that invoice amount above. So let's look at C. There's not really a big equation for this. It's more just very logical thinking. What is the way to calculate? Okay, so let's look at C. C says a electronics wholesaler sold these items to Sell Now, a mall retailer. 150 cell phones at $85.15. So we're going to multiply that. Anytime it has at, we just go ahead and multiply. And 75 charging kits at, so again, multiply, $14.80. So let's go ahead and extend that out. $12,772.50. And $1,110. Those two added together, $13,000. $882.50. Okay, so this is how you calculate an invoice, and then the next one, D, looks at defective product. So one of the items in problem C, Sell Now returned 12 phones due to a wrong model being sent. Sell Now also returned 2 charging kits because of the damage. What is the amount of the credit memo because of these returns? So these were the phones, and these were the kits. So if they return some of them, how much would they get back, or would they not have to pay as a credit? So 12 phones, same price as above. $21.80, and 2 charging kits. So added together, they would get a credit back of $1,051.40. Okay. All right, one last section that is fairly simple is the customer account balance. So similar to above, the math is extremely easy. The only tricky part is just making sure that you understand the lingo. So most people use credit cards when they do not pay cash for a purchase. Similarly, businesses whose customers are other businesses often let them buy on credit or on account. So buying on credit is also called on account. Okay, the seller then keeps the records for each customer to show them how much they owe. A common form for a customer's account is shown on the next page. This account shows the transactions between garden products and yard and stuff. So the math is just addition and subtraction. It's just making sure that you know the difference between those two. So if you look at the yellow account form, it says balance forward of $12,763.87. That balance is brought forward from the previous month. So you can see on the date it says May 1st. That means that the balance forward is coming from April. So that means that they did not pay last month, and their balance is being carried forward. So from there, they had charges of $10,000. So that added to the balance. They have a credit memo of $573 that gets subtracted, and a payment of $12,000, a payment of $9,000 that brought their balance to zero. So as you are looking at calculating a balance, this is not really an equation, but just a cheat sheet rather. So when you're looking at a balance, charges are added. Charges are added. Balance forward. Is the starting amount. And then credits are subtracted. Okay. So let's look at E. The customer account for Retro Hardware showed a balance of, and that's the balance brought forward, so a balance of $2,384.76 on August 1st. Sales were $500.15 on August 3rd. So that's going to be added in. An invoice for $841.56 is going to be added on August 9th. And a payment was received on August 13th. So a payment is going to be subtracted of $2,884.91. A credit memo was issued on August 16th. So that's going to be subtracted out of $56.73. No other transactions happened in August. So what is their account balance on the 31st? So if we add these all together, add and subtract depending on what it is. I believe we're left with an ending balance, if my calculations are correct, of $27.83. It's always a risk that I could be wrong, but I have no one else to compare to while I sit here. So hopefully that is correct. Let's go ahead and look at F. Mint Wholesalers account for Laurel Place Markets showed a balance of $29,379 on November 1st. So we had a starting balance of $29,379. On November 13th, they made a payment of $21,893. Laurel was charged $8,000, so a charge is added. 112, and on November 16th. And on November 25th, there was a credit memo of $2,570. What is the account balance at the end of the month? I get an ending account balance of $13,028. Okay. All right, so those are all of the sections. So your assignment is to do numbers 7 through 26 all. So the way that this week is going to work is you'll do 10-1 today, 10-2 tomorrow, 10-3 on Wednesday. You'll have a quiz on Thursday so we can close out the week before spring break, and then when you return next Monday, which I'll still be gone, you will pick back up with 10-4, another video lesson. So there is no day for a review for this quiz. You can do a note card if you want. It's only 3 sections. And then we'll take another quiz at the end of chapter 10. So chapter 10 will have 2 quizzes instead of just 1, but that's the best way I can think of to do it so that we don't come back from spring break without closing it out before we leave. So we will pick this back up tomorrow, 7 through 26 all.